This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. The European Central Bank laid out a path to terminating all asset purchases and launching a series of rate hikes on Thursday as it sharply raised its inflation forecasts. But although the move was widely expected and the bank flagged an initial rate increase of only 25 basis points in July, President Christine Lagarde left the door wide open for a 50 basis points hike in September and beyond. With no sign as of yet of a let-up in the price surges across the euro area, as Lagarde had been hoping, there now seems to be a sense of panic. The hawkish turn sparked a renewed sell-off in Eurozone sovereign bond yields. The ECB outlined plans to contain any fragmentation in the Eurozone bond market. But investors clearly wanted more details, and a few alarm bells have been set off in the bond market amid fears that highly indebted nations will struggle if rates rise too high. The most telling part in all this, though, is the euro's plunge yesterday, even as yields soared. The mood also soured in equity markets, and European indices are on track to extend yesterday's steep losses on Friday. With stagflation risks on the rise, stocks have been hammered this week as optimism is in short supply right now. Shares on Wall Street slumped on Thursday, led by the Nasdaq. Although long-dated Treasury yields have steadied a bit, the two-year yield is close to hitting a new 3.5-year high, as traders are no longer so sure that the Fed will pause its rate hikes later in the year. The latest CPI numbers, due out of the US later today, could either reignite or dent hopes of the Fed going into lower gear. Adding to today's doom and gloom is the tightening of virus restrictions in China. The ongoing risk-averse sentiment has lifted the US dollar to 3-week highs against a basket of currencies. But the euro is resisting further declines, and the Australian and New Zealand dollars are recouping some of yesterday's losses. However, the Canadian dollar has slid past the 127 level in spite of more hawkish language by the Bank of Canada yesterday. The Japanese yen, meanwhile, was mixed on Friday as intervention speculation continued to swirl in the markets. This was today's Daily Market Comment. Thanks for joining us at XM.com.